Ladies and gentlemen, oh boy, welcome to it. It is going to be probably the most exciting stream of 2022, and it's just getting started. My name is Jericho, and I'm joined by some excellent guests, also known as Stock Jock and our HRBlock Tax Pro. Good to have you guys on, and good to talk about the fun stuff.
Good to be here. Good to be here.
Yeah, so
absolutely.
If you're watching on front page, welcome. If you're watching on my channel, welcome. And if you're watching on Stock Jocks, I guess you're welcome too. For those of you who don't know Stock Jock, why don't you give us a little bit about what you do, your channel, and who you are?
Sure, glad to. Thank you, Jericho. And let me just say this real quick. You guys are good-looking men. Let me just say that real quick. So
thank you.
No problem. So my channel, we day trade. We get into the market, the stock market particularly. And we dabble. We look at green candlesticks and red candlesticks all day, and we make lots and lots of freaking money. Been doing it for about 10 years because I lost my job. 2 years, my first 2 years I sucked. Last 8 years, making bank. 2021, 1.3 million. And I live in my mom's basement. That's good.
Still?
Hey, it's free.
Yeah, keeps the overhead low.
It's free.
Wow, that's incredible. So good to have somebody who's at least a little bit literate with stocks on. I have the literacy of a 4-year-old, both with just normal reading and with anything stock related. So I'm going to represent Twitch chat with my questions. And last but not least, we have the man of the hour, or one of the men of the hour, Andy. Andy, what do you do? Oh, that is a perfect freeze frame.
Man, someone screenshot that one. That's a
yeah,
good
that's
one.
a great one.
It's going to go down in the history books right there.
Yeah, that's how I feel every time I have to submit literally any tax whatsoever. So while we wait,
hey,
we're back.
So my name's Andy Phillips.
Oh, and another one.
Nope, he's good. He's here.
Am
Andy,
I
you're good.
up on y'all?
No, you're good.
Okay, awesome. All right, yeah. So my name is Andy Phillips. I work for HRBlock. Been here about 12 years. And man, I do a lot of stuff with taxes. So I'm just a tax nerd through and through. Yeah, I work for a group called the Tax Institute at HR.
And there he goes.
Man,
that was good.
I mean,
that was good.
That was great. That was great. Yeah, no, all things considered, my favorite thing to do is work through tech issues live. So right up there with filing taxes.
Him working at HRBlock, I assume he's like absolute top tier professional when it comes to taxes. I mean, you don't work at HRBlock unless you're an absolute stud.
Yeah, I would hope so. I mean, if anything, this is like indication the IRS is trying to silence HRBlock from giving away all their secrets, which I hope we'll find out many. Chat, this will be a large Q&A session. We have some mini games that we're going to work with you on for you to show your tax knowledge, however small or large it may be. And we're going to be taking questions from the chat, whatever you have, whether it's crypto oriented, because that is definitely the hot topic in I guess like since the 2020s started, right? Crypto is kind of the spice of all day traders and everything in between.
Absolutely. And hopefully we dabble into some NFTs too. You know what I mean?
Yeah.
Is that your love language?
You know, I work a lot in the music industry, and so a lot of my friends who are artists that made literally no money whatsoever on major streaming platforms are now making more than they ever had just from like some very few people spending a lot of money on their art. So I'm conflicted. I see a lot of the pros for small artists, and I see a lot of the quick buck crew. So, I mean, whether you're making zero money flipping or a lot, I'm sure they have ways to minimize your taxes.
Yeah, absolutely. And I'm looking forward to hearing that about how to minimize that taxes, because I feel like I'm paying a lot. I feel like and I feel like HRBlock is going to set me straight.
Without doxing yourself, what state are you in? Because I live in lovely California, so I promise that I am paying so much taxes. If they can do anything, I would be grateful.
Well, I gave my personal information out to the interwebs one time in my life. And after that, it was like I couldn't go out in public anymore. So I stopped doing that. Like I would walk down the street and women were throwing their babies at me, say, "Take my baby. Take my baby."
Yeah, I've seen it happen.
Okay, so I don't do that anymore.
That's the plot of Pursuit of Happiness, right? I think. I don't know.
Think so.
Yeah. Well, we got Andy back. Andy, welcome back.
Hey.
let's just take it from the top, because I don't know where you cut off. But Andy is back, and he works at HRBlock. What else you got for us?
Yeah, so I work at HRBlock, been here about 12 years. I'm a director with a group called the Tax Institute, and we help, our tax professionals across all of our offices and a lot of our partner groups here at our corporate headquarters with about everything related to tax. And thanks for having me, and really smooth start, so it can only go up from here.
I'd be lying to you if I said that this was my first time doing any of this and having this happen, so I feel like this is why look, it's live, 100% live. The questions will be from chat, so if you have one, it's probably gonna get answered. And we've been told that, most everything is on the table. If you have questions about writing off OnlyFans subscriptions, I'm sure you're gonna answer that one. If you have questions about, buying specialty equipment, so am I right in saying that you're the man to ask for all of this?
Those are key write-offs.
Yeah.
Yeah, let's answer some tax questions. Here to do it.
Okay, great. So we have a little mini game that we're gonna start up first, and it's gonna be a little bit of crypto, a little bit of default taxes and stuff. But there are 5 misconceptions that a lot of people have when filing taxes. We're gonna ask the chat. The chat is going to do their best to answer correctly. And we're going to kind of have a little head-to-head. Will the Stock Jocks chat get more right? Will mine get more right? And then, Andy, you're going to come in and tell us who is correct. What is going on?
I love it.
All right, cool. Stock Jock, you got these questions, or do I have them? I've got the questions. Do you have them as well? All right, I'm going to answer. I'm going to ask away. First myth, chat. If you haven't sold crypto at all, if you haven't sold any of your crypto, you don't have to pay taxes on it. Is that a myth, or is that a fact?
Let's go chat. Let's go
what do you
chat.
think, Stock Jock?
If I haven't sold, listen.
Yeah.
If I haven't sold and someone's taken my money, there's gonna be issues.
Okay, there's gonna be issues. I feel like since you've been day trading and stocks are relatively similar in a lot of ways, Andy, am I correct in saying that to crypto? Traditional stocks operate in similar fashion?
Yeah, so for the most part, they follow some of the similar rules, but with this one, generally, if you, dang it,
Whoop.
Can you grab that for me?
That happens to me about every stream. Don't worry, homie.
I know.
Yep. Live stream, the fun continues. So the answer to that is, in most cases, if you have not sold it, you don't have to pay taxes, but there are some exceptions. So if you use your cryptocurrency to pay someone for providing services, or you use it to buy, use it to buy something at the store somewhere that takes a virtual currency or a cryptocurrency, you are taxed on that transaction, which is pretty confusing. But what you're paying tax on is the difference between what you paid for that cryptocurrency, or what's commonly called your basis in it, compared to what the fair market value was at the time that you used it. So let's say you bought a particular piece of cryptocurrency for $100. It had gone up in value, and then you used it to pay for something that costs $200. You'd also have a taxable gain of $100. That's complex. It's hard to track. And so that's the rule right now. Interestingly, StockJack, I know you don't like it. I'm sorry. I didn't make the rule.
Yes. I'm not taking it out on you. Don't worry about it.
Yeah, there is, there was a bill just introduced in the last week or two in Congress to allow people to exclude kind of a small amount, so up to $200 per transaction, to keep people that are just using it for personal transactions from having to try to, administratively, that's a lot to track, plus the tax piece. That's not a law yet. That just got introduced. It's kind of modeled after how they treat foreign currency. So for travelers, you go to another country, you come back, you exchange your foreign currency for US dollar. They allow you a $200 kind of, you can exclude up to that amount and not worry about it. And so there's something brewing for virtual currencies right now, or for cryptocurrency specifically, but we'll have to see if that gets across the line.
Got it. Well, that is detailed, and it is as confusing as you think it is. So, this is a good, I can't think of a better way to just start things off by saying I haven't done my own taxes in, like 7 years, and I don't think I ever will ever again, no matter what I'm doing, because it's designed, like, it is a very difficult thing, and we're not taught any of it in school. You know, trying to do quarterly taxes myself and figure out as a content creator what that looks like when my parents get it taken out of their paycheck. It's like, I mean, it's learning a new language. So what better way to kind of tee it up and say, no wonder you have a job. What am I going to, how am I going to do any of this?
So the stuff, let me ask you a question there real quick. Is the stuff that they're working on with the bills, is that going to be implemented in the 2021 taxes potentially, or is this going to be for the 2022?
Yeah, it's, you know, it's all very tentative at this point. So who knows what gets done, but right now I think it's more on a go forward basis. So it wouldn't be for last year.
Got it. Okay. Well, myth 2. Chat, you guys did a pretty good job. I saw a pretty solid split of trues and falses, but maybe you'll get this one. Myth, can you claim pets as a dependent? That's a good one. I would say, why not? You know, they're furry kids. I don't understand why we would treat them any different than I think my dog's smarter than most babies, so it's kind of unfair that I can't write him off.
It's true. I mean, if they are, I'm making a trip to the pet store later on today. I mean, why not? How many can we deduct? I'd love to hear from the HRBlock. I know they know the answer.
Yeah, they do. So, hold on, let's let chat stew in it real quick.
Yeah,
but you're right. You brought up a really good point. At what point, if that were the case, would there be too many? Like, can I get a colony of ants and write off 13,000? You know, like dependents?
They are individuals.
Yeah, I mean, hey, yeah, I know there's some. I mean, at this point, I feel like people like Phillip Rivers who play in the NFL are also doing the same thing with their kids. He's got like 8 kids at this point. So like, what? Where do we draw the line? Actually, that's a good secondary question. 1, can you deduct pets as dependents? And 2, is there a limit to how many kids you can deduct? Like, could I have 30 kids? And I'm just like, like IRS is paying me now.
Or can you deduct all 30 of your kids? Yeah.
Right. Exactly.
Yeah. Not if. Yeah.
All right, are we giving them a little more time to guess and chat, or what do y'all want to do?
My chat is clueless.
My chat is pretty firm on no pets, but have no idea about the maximum number of kids you can deduct.
Yeah.
We're trending towards no pets, huh? Okay.
Yeah.
Okay. You let me know when you're ready for me to jump in, but I'm liking where we're going with chat.
All right, I think we're ready to go. Can you claim pets as a dependent?
Okay, so your chat got it right. No, you cannot. Wish that you could, but then it would have those thorny questions of ant versus dog or horse. You know, what are the the relative cost of upkeep? But unfortunately, the answer is no. You cannot. A couple kind of nuances for animals is if you have a service animal, particularly if it's kind of a physician prescribed, support animal or service animal, you may be actually able to deduct that as a medical expense. Like always, tax is complex. You have to, that basically has to exceed a certain amount of your income, or 7.5% of your adjusted gross income, to throw some real tax nerdery at you. And you also have to itemize your deductions. And so most people claim the standard deduction now. So even in that case, most people aren't claiming those medical expenses for service animals, right?
Right.
Another one, and this is kind of a newer thing, is some people may use their animal to generate, income. Maybe it's a social media influencer, or they have a dog that people follow and they get paid for things related to that. Now, if you've got an animal related to your business, the answer may vary, because then you're talking about some of the kind of business expenses of maintaining your animal for that business. Same with farm animals. If you've got a farm, a working farm, there's some expenses you may be able to deduct for your horses and cattle or whatever it is that you're raising on the farm.
Wow. Okay. So, I mean, I do have a dog, and since there are probably a lot of aspiring content creators, or at least right now there's a huge growth of people just doing their own thing and trying to be self-employed in multiple means, what does the process look like when you have a pet that is an influencer that's got a significant following or is growing a following? is that
Great
you can't just say everything is writable, or you can't just like write off food, vet bills. What can you do?
Right. So what the first thing you want to do is like with anything taxes, keep records. And then, yeah, it's going to be, that's a good question. I'd have to think about that a little more of what would be in and out of bounds. But, in general, I do think the, kind of the maintenance expenses for keeping a income producing dog, if you, if it's an income generating social media influencer or something of that nature, then yeah, you would be able to kind of keep track of those expenses. And I'm having trouble with specificity, thinking of anything that would be out of bounds, but I'll think about it, and if anything comes to mind, I'll circle back.
Okay. All right. I love that. In other news, I got to go find a camera for my dog.
Absolutely. I did have a question about props and stuff like that. I have a co-host, but it's not an animal. It's what I like to call Stakita Chiquita, which is just my co-host on my stream. Am I able to deduct props and co-hosts if they are valuable things for my stream, if it brings me in followers and everything like that?
Yeah, I mean, something like that that's just kind of a handheld prop is generally going to be a deductible expense against your your business
You hear
income.
that, Stakita?
Deductible.
You're free. Absolutely.
Oh my God.
It's a write-off, so it's not dollar for dollar, but you're going to get some of your money back.
I feel like maybe that should come up a little bit later if we have more time in the Q&A section because I hear that so often. Like, it's free, it's a tax write-off. Like, that's not how it works. All right, we've got another myth. Let's keep it going, chat. You guys have done awful so far, but I'm looking forward to the third one. Myth. Only crypto $10,000 and above is taxed. Anything below is free for personal use. So airdrops, other stuff that's gifted to you, a la an NFT, maybe not a monkey photo, but like some ones that are less expensive. Is that true or false, chat?
My chat's feeling myth right now. I think they're onto something.
You know what I'm wondering is, I'm sorry, I combined two, looks like we combined two questions. So let's just start with the first one. Only crypto $10,000 and above is taxed. Anything below is for personal use. So I assume that what they're saying is, hey, I've got $9,000 in Bitcoin. I gained some of that over this nice little bull market. I'm good to go. I don't have to report that. I'm going to just think that's where we're going with this. I'm waiting for clarification from production.
I think that's where we're going with it as well.
Yeah. Okay, cool. Well, you're as good as production, I promise. All right. My chat seems pretty split between trues and falses, so this is going to be a good one. What about your stock?
I think they're going with the false on this.
This is great. It shows the clear difference in how smart our chats are.
I wouldn't, just because they get one question right, I'm not giving them that much credit. Let's be clear.
Gotcha. The bar is pretty low, I'm not going to lie. I think we're good to go. So is it a myth? Is it true or false?
That would be a myth. There is no such kind of floor. I talked a little bit earlier about, hey, maybe something's going to brew up later, but that's really limited. Just a straight up myth on this one.
Yeah, I mean, that's pretty
I won't wax
cut and dry.
too heavy on this one. I'll just keep it, pretty short.
Yeah. I mean, I guess in general, chat, if you're making money, you got to tell the government about it. It's like, it's pretty good base, right? All right. All right, so we asked the fourth question. Let's throw it back up here again. It is related similarly to the third one. Airdrops and other free tokens, are those taxable? For those of you who don't know, and I'm hopefully going to get this correct because I haven't gotten too many airdrops, are kind of like a benefit that you receive for free, usually, from a crypto or an NFT group as part of like a loyalty program. I don't know if there's a comparative way to say it outside of that. I don't know. Do you have a good way to explain this in a non-crypto fashion, Stock Jock?
If someone gives you something and for free, do you have to pay taxes on that? That's basically what it comes down to. Or when do you pay taxes on that? I guess is the real question. Do you have to pay it because you just got it, or do you pay it when you sell the thing?
Well, if you sell the thing, yeah. Like,
if you sell the thing.
Yeah, because you might not ever sell it. If you, in my head, I'm thinking like my friend gives me a pair of shoes because we've been friends for 10 years. Like, do I gotta deduct? Like, that's a gift, but is it a gift that I have to? Is it the same as like an airdrop, which is like a company giving me something or something like that?
Yeah,
almost?
I mean, this happens in
This is
the NFT world quite often. Like, do you have to pay taxes on it at the value that you received it at? What if 2 years from now it goes to nothing? You just paid taxes on it when it was, worth $1,000, like, and then it goes to nothing. What do you do?
I didn't even think about that. Oh my God. Yeah. All right. Well, another reason to have me sit here and wait for smarter people to explain it. It looks like a lot of people in the U.S. who are saying there's gift taxes in the U.S. and that's a whole nother concept. So, I have no idea. Let's go, Andy. Do you have to pay taxes on airdrops or free tokens that you get specifically in the crypto world?
Yeah. So let's, we're going to kind of have to divide this one up because there's gifts, right? Use the example of a friend that gives you a gift where there's what they call donative intent. So maybe someone who's just a good buddy gives you some cryptocurrency. When it's a true gift, that is not taxable to the person who receives it. And that remains true even if it's cryptocurrency. So I give you some, that's not taxable. In some cases, depending on the value, I, as the person giving it away, may have to file what's called a gift tax return and pay gift tax. There's a certain amount I can give to any individual every year and just exclude it. I think it's still 15,000. So up to 15,000, I can just ignore it. You get above that, then I, as the donor or the person giving the gift, may have to file a gift tax return. That's really around keeping people from kind of giving away assets to family, things like that, to avoid any potential tax, right? But when it comes, so gifts, no, generally not taxable, and almost never taxable to the recipient. Now, airdrops. This was a big area of uncertainty. People had a lot of questions about this, and the IRS put out an FAQ in 2019, and they used the example, and as I remember, some folks said, well, that never happens in reality. But what the example they used was that there was a hard fork, and as a result of that hard fork, the holders got gifted or got airdropped additional cryptocurrency or additional virtual currency as a result of that hard fork. And so when that occurs, when you get an airdrop of the cryptocurrency, it is taxable. It's taxable according to the fair market value at the time you received it. And pretty interesting, you have to have what's called dominion and control over it. So as soon as it hits your wallet in a way that you can actually transact with it, then yeah, you are taxed on the receipt. And so that's surprising to some, but that is IRS guidance via an FAQ.
Man, that's crazy. And you can give me a really short yes or no answer on this because now I'm just super curious. Conceptually, I have $50 million in crypto and I airdrop $50 million to somebody. They have to pay $50 million taxes on that $50 million.
You just wrecked their life is what you just did.
And I'm just like,
no. So
who's
that
your
goes
worst
back
enemy?
to
Let's
you as
go.
an individual. They're still getting, it kind of depends, as long as they can dispose of it, they're still getting value. But so that goes back to you as an individual doing it. You as an individual, that's a gift. When it's, when it's an exchange and they're giving it to you kind of, like you said, as a loyalty or as a result, it can happen sometimes with a stock split as well. If you're an investor in stocks and if they split their stocks, you may go from 1 to 2 or 1 to 3. And so in those instances, for the hard fork, it is taxable. That example you gave would actually be a gift. And now's as good a time as any and here's a new hot one that may be interesting to folks is there was also some questions around staking income. And so with proof of stake, when you do staking and you receive, a cryptocurrency in exchange for that staking, is it taxable? Up until just pretty recently, the questions were really around, okay, with proof of stake, what are you, you're helping clear transactions? It was really around, is that rental income? What type of income is that?
Right.
Well, that really just changed recently because there was a couple, I think they were in Tennessee, and they had gotten around 8,000 of, I don't remember the coin, but it doesn't matter, some sort of coin from a proof of stake transaction. And so the IRS said, well, that's taxable when you got the coins. And they challenged that, right? And so they ended up taking it to court, filed a petition to take it to court. And this just in the last week or two, the IRS said, you know what, we'll refund you the money on this, and we won't move forward with the court case. And this couple decided, no, we think it's really important for others and for, we're going to do this again in future years. So we want certainty. And so they're moving forward to trial. I think it's in Tennessee, in U.S. District Court. Yeah, so we may see.
Let's go.
Yeah, yeah. Via a court case, we may even see some additional guidance coming soon. So, cool. Like with anything, tax guidance comes from a lot of places, and sometimes it's court cases. So, sorry to nerd out on you there, but just kind of a new development that just kind of came up recently.
That was awesome.
Yeah, awesome. We've got one more question, one more myth for chat to kind of sleuth through. The fifth and final one. The myth is that you can deduct personal trading card collection and comic book collection sales. So if you're collecting something and then you sell it, you can't deduct those. That's the myth. It was worded the opposite in my question. Sorry. So you can't deduct personal trading card or comic book collection sales. Is that true, or is that a myth? Chat, let me know. This is
That's
also
a good
really
question.
Cool.
It pertains to me quite a bit because I have quite the lightsaber collection that I actively go after. I have all sorts of them. I have old ones and new ones and bright ones and all great ones. And I need to know this question because I kind of bought them with the idea that I could deduct them. So I'm interested in this one. I do have trading cards as well, but mostly NFTs. I don't know. I don't think those count.
Same thing, right? No, I'm just kidding. A lot of people saying false in my chat. I'm not really sure on this. I don't think I've ever collected something and then either flipped it, sold it, or whatever. You ever get the problem? Most of the stuff I collect, it's like worthless after 5 years, and I'm like, why did I even keep this in the first place?
Yeah.
Like, surely this limited run, chip bag will be worth something.
Absolutely. Or my Coke collection that's all exploded in my basement down here, But yeah, I'm interested to hear the answer. My chat's saying true, which I'm shocked. Chat, disappointed somewhat. But
maybe they're right. Andy, can you deduct personal trading card or comic book collection sales?
Yeah, so the key word is personal. So if you've just got these for personal purposes, so the rule there is personal property, whether it be some comic books or a personal use car. You sell it and you've got a gain, that's taxable. You sell it and you've got a loss, it's a personal loss and you don't get to deduct it. The one caveat, and Stock Jock, you may fall into that. I couldn't tell if you were using that personally or not when you were whipping that lightsaber around. But if it's for an investment, so maybe you're really buying into this for investment purposes, right?
Okay.
You're taking steps to preserve and store them, keeping them in original packaging, with the intent that these will appreciate in value. In that situation, you may be you may be able to take the position that, look, this was an investment and it's actually a capital loss, deductible. We'll ignore the really wild personal swings with the lightsaber and pretend it never left the case if that's what we need to do.
Yeah, absolutely.
But yeah, so I think, but personal is the key here. Yeah, I mean, like I've got some baseball cards in my basement that we continually move around and I do not take steps to preserve. It's not an investment. I don't really know what I paid for them, but if I have a loss, I'm not going to be able to deduct it.
It's like the Mona Lisa. I got the backup lightsabers that get their use, but the real ones are tucked away and no one ever sees. That's
perfect.
Yeah,
so
perfect.
I got personal and investment sabers.
Yeah.
That's who knows? Maybe that's like the greatest investment vehicle you could ever have, and we just don't know it yet. We're the cavemen, and you're thinking ahead here.
Check in with me in 10 years or 20, 50.
Yeah, remind me.
Yeah.
Chat, so fabulous job. I don't know how many of you guys got right. I'm just going to assume that Stock Jock's chat got it correct more than I did, so you don't win anything. But we're going to move on to the first Q&A session, which is a great opportunity for you in both of our chats to ask any burning tax questions you might have, whether it has to do with cryptocurrency, because we are in that very exciting first real tax year for a lot of people spending their stimulus checks, which we got on cryptocurrency. People buying a lot of stocks, you know, GameStop and AMC and stuff, that happened in the past year. So a lot of people doing this stuff for the first time and doing like individual transactions. So if you have any, we're gonna put them up on the screen. You got to use the AMA extension, so make sure you have that enabled. Mouse over the screen, should be on your right hand side or left hand side, and then go ahead and submit your questions. In the meantime, Stock,
I hope you're ready questions? For these. There's going to be a lot of questions. My chat has been waiting for this moment.
Yeah. Yeah.
I can't wait.
I mean,
I can't wait.
Oh, the anticipation.
Yeah.
Could tell you're excited. Let's go.
I mean, it's just like, you never know what you're going to deal with. I'd like to think that they're going to be some like really well thought out, very specific or niche type cases that are going to be interesting for me to learn about. But I also just know that there are going to be some questions that are just like, you know, I don't know. They don't teach us anything in school. I didn't know how to file taxes. I still don't know. So I'm not really sure anybody out here is going to give me like a real banger of a question that that will have a respectable answer on my chat.
You're right. You nailed it right on the head. You don't learn this stuff in school at all. Like zero, none, nothing. So people are like scared of taxes, as they should be, because if you mess up, the boogeyman will get you. But like for real though, joking aside, no one has any idea how to do it their first time. They're clueless. They don't know. And you know, that's why this HRBlock coming on here today is so helpful, because they're answering a lot of questions and people are going to be like, okay, I can do this.
Okay. Yeah.
And you know, while we're waiting, because I think one of you talked about making estimated payments. And so, you know, a lot of people, when they do their taxes, right, they're doing it as a look back. They're like, okay, it's February, it's March, it's April. I'm preparing my taxes and really thinking about this now. But you know, the thing is, there's a lot of decisions you need to make during the year, particularly if you're self-employed. Hey, am I tracking all my expenses? Should I be making quarterly payments so I'm not left with a really large tax bill when I go to file next year? And so instead of doing it as like this look back where you're just like, okay, gotten to the end of the year, let me do my taxes, it should really be a look forward. And so that's a block. That's what we really try to do is help HRBlock customers, you know, understand what happened last year and then learn from that to plan for the future. And small business owners, gig workers, freelancers, they certainly have opportunities to, make sure that when they go to file their tax return next year, there's no surprises.
Yeah. I mean, I had to very quickly learn about quarterly taxes and how to manage that. I actually really only had one, what I'll call like a standardized job where I received taxes taken out of my paycheck. And that was when I was like 15. And then I've been self-employed since then. So going through that and then transitioning to like, incorporating and then transitioning to being on payroll, it's been like, I've had like 4 different ways I've paid taxes. And I feel like all of them are equally very confusing to deal with. But we've collected a bunch of questions you guys have posted in chat. And if you want to vote on which questions go up to the top, just go ahead and vote on the AMA extension. We'll choose the best ones. We'll start with those, and we'll work our way down the list. I see some actual pretty solid ones, so I'm hopeful.
I'm excited.
Yeah. Okay.
My chat's blowing it up with the questions. I don't know which ones are going to get through, but this is going to be good.
Yeah, neither do I. The AMA voting is beginning now, so you guys got 1 minute or so to go ahead and vote on your favorite questions. And this will not be the only Q&A that we've got. We have 2 more additional Q&A sessions, so you'll be able to ask questions if we don't get to yours in the next 25 minutes or so. And also of note, this won't be the only H&R Block section. This is the first one, and so there will be one in roughly about 2 weeks' time, so keep an eye out for that if you don't get your question answered during the next hour and a half. There's always next time, and I'm sure this could be very, very beneficial to people. We'll give you more details on that as we get them.
I can't see the question, so I'm getting so excited here. I'm just waiting.
The anticipation is killing you. I know. We're just going to wait a few more minutes, just make you sit there and just wallow in the anticipation.
Look,
no, it's going to be good. I have a quick question, if I can, while we're waiting for chat to finish up. Can I ask a question for you? All right, here we go.
Absolutely.
With me in day trading, is there any benefit at all for me doing an LLC or anything like that? Or is it just personal, everything easy peasy?
It's a good question, and it's a common question that comes up at tax time. And when it's just a single member business like you, the tax considerations, unless you wanted to choose like, okay, I want to be an S corporation, which requires you to file a separate return from your 1040. If you're like, you know what, nope, I file a Schedule C, I want to keep doing that, then that choice of whether or not you want to form an LLC is really around, liability protection, which is not a tax issue. That's a legal one, but I don't know what risks you have, but you could kind of balance those against, well, okay, whatever state you're in, do I have now additional filing requirements? Is there like an annual filing fee I have to pay of, maybe a few $100? So for tax purposes for you, it probably doesn't change much. And then you just balance, well, are there non-tax reasons I'd want to do it? So.
Okay, good to know. So it's more liability rather than,
at least not for tax,
saving money.
That's right.
Well, if you've seen my stream, then it probably is a bit of a liability. So I probably need to get on that LLC thing.
And I saw some solid disclaimers. I also saw some really interesting stuff.
Good.
Love to hear it. We have our first question, one from the chat, and one that I'm pretty excited on because it's something that I've wanted to ask him. It's great. Are cryptos that are any like cryptocurrency that you acquire on an app and then sell on the same app and then buy more crypto with what you just sold taxable? So, for example, I open an account on unnamed service, I buy low, it goes up, I just trade it, and then that traded cryptocurrency also grows. Where do I pay taxes on? Is that tax deductible or taxable individually on each sale? Sorry.
Okay, so you buy one and then you're trading it for a different cryptocurrency?
Yes, I guess it's
okay.
I don't know if they're two separate things. One, you're literally buying it, then you're selling it. So now you have cash in the app, and then you use that cash to buy more crypto. Is that tax deductible? And the other one is you don't ever take it off chain. You just continuously trade it to a different cryptocurrency.
So for that first one, you sell it and you get, fiat currency, you get like the US dollar or even another crypto for it. That is a taxable sale. You're going to be taxed on the difference between the fair market value, which is generally going to be the value what you received against your basis in the cryptocurrency, which is generally going to be what you paid for. If you paid an additional like fee, kind of like you have brokerage fees, you would add that into your basis and the additional amount would be taxable. Let's say on the other hand, you bought a cryptocurrency, it went down a little bit, and then you said, okay, well, I'm just going to quickly harvest this loss, and then I'm going to turn around and buy it again a few days later, exact same cryptocurrency, I just want to get that loss, and then I'm going to write it on the way back up. That in stock terms is called a wash sale, and those are not allowed losses for stocks. But with cryptocurrency, currently there are no restrictions on the ability to deduct those losses. And so the wash sale rules don't apply. That may be short-lived. It's been
that's what I'm talking about.
Opportunity. Yeah, so we'll see how long that lasts. But today the wash sale rules only apply to stocks and other securities and not to cryptocurrency.
Gotcha. Now, so to clarify for the second question, because I don't know if it is different. If I bought Ethereum at $1,000, right, and then Ethereum goes to $4,000, and then I just trade my Ethereum for Bitcoin, and it's sitting at 30K, and then Bitcoin goes to 50K, where do I pay taxes on that? Is each individual change? Because I never receive fiat currency. It's all still on the blockchain.
Yeah. It is, even if it's still on the blockchain, when you sold or exchanged the Ethereum for the Bitcoin, that's a taxable transaction.
Cool.
Again,
perfect.
Fair market value, what you received versus your basis, and then you kind of carry that higher basis into the cryptocurrency into the Bitcoin. When you sell it, you're going to have gain or loss on that.
Awesome.
Yeah. So even if you don't take it out of your wallet, it doesn't change it. Unfortunately, it's still taxable.
Darn. The next question's from Stock Jocks chat. Do you have that one
All
pulled
right.
up?
I do. I'm ready for it. Okay. This is a very important question, no doubt. If I have a vintage wine collection and I drink a bottle, just one, can I claim the value of the wine as a loss?
I see
Be
those
careful
crossed
with-
fingers and no. Yeah, unfortunately, if you're just drinking personal wine because you're like, well, I'm going to give it a try, you certainly have lost some money, but that's a personal loss. If you're a
Okay.
business owner, maybe you have a tasting room, and you say, okay, I've got some really important customers here, and I want to pour them each a glass. Then in that situation, you would have a deductible business expense. But if these are just sitting in your basement and one night you open the wrong bottle, yeah, unfortunately, that's going to be a personal loss.
So if I invited you and Jericho over for a business meeting and we pop one of those suckers open, threw it back responsibly, what about that? It's a business meeting.
That in that situation, yeah, I mean, the only thing I'd be worried about is that a lavish expense, which, there's limit on lavish expenses. And so, hey, a $15 bottle of wine would make a lot of sense. If we're talking thousands of dollars, you may get into those lavish expenses where you may have a bad outcome.
Gotcha.
And then, there's kind of some special rules on, meals and related entertainment expenses. If you're a business owner, generally those are only deductible up to 50% against your business income. So you're a small business owner, you provide some food to, or the general rule is if you take your team out to eat, you're only able to deduct 50% of those costs. There's a special rule for 2021 and 2022. And it was kind of one of those, there was a few bills that came through, or a few kind of law packages that came through to help different industries because of the impacts of COVID. And so to encourage business owners to keep taking, folks out to eat for 2021 and 2022, if you buy food from a restaurant, even if you don't eat it on site, you're able to deduct 100% of those expenses. So you don't get the 50% cap. Special rule, it really was a pandemic related rule to help the restaurant industry, that people would continue to go out. Likewise, that's kind of like that rule about, that you can take it home. Now, if you're buying it, maybe you own a building and you have your own cafeteria in the building, not the same rule. It's when you go to kind of a restaurant outside of your building.
I have been abusing that rule the last 2 years. It is truly the greatest thing. I eat out so much, and thank God I am the only team member here. So love that rule. Would love for them to continue that. Oh man.
Good stuff.
Oh yeah, good stuff. Okay, so we're gonna load up the third question there. And that is great. This one's from my chat. This is cool because this is kind of like almost an NFT-esque question. And you're going to have to tell me how familiar you are with Counter-Strike, Andy, but if I am playing Counter-Strike and I get dropped a very rare skin, it's worth thousands of dollars, should I be paying taxes on the skin drop? I haven't sold it, but it is worth $10,000. And I got it just from playing the game.
Don't break our heart, Andy. Don't break our heart.
Yeah, so there was an IRS FAQ on kind of in-game tokens and related things, and the rule was that it was taxable. I'm trying to remember if there were any exceptions.
Gosh!
I don't remember one, but one of my colleagues is coming on. He's going to tap me out here in a little while. And if we can go back and look and say, hey, maybe there's an exception for this case, we'll circle back to that. But yeah, right now, I think that falls within some IRS guidance that says that, that's taxable. Because the IRS guidance is, it's commonly applied to cryptocurrency, but it's really more broadly applied. It really applies to what they call virtual currency, which is any digital manifestation of value that's not like the US dollar or foreign currency. And so these rules they've issued guidance on aren't just like crypto. It's, in-game tokens, things like that do fall under this guidance.
All right, so there is a caveat to this, and I think that it's probably, shout out to the chatter that said it, but the Steam market is a closed market and is technically has no tangible value. Now, you can sell market items, and then you get money, Steam dollars that you can use to pay for anything on that market, but you cannot exchange that for US dollars. You can, however, use a third-party system to sell the item. So, walk us through that. Do you need to pay taxes on the closed system market that you don't actually have tangible value for? Because I don't know.
But you can use a third party to then dispose of it for value.
If you wanted
so
to,
like
it is not
in game. It's worthless, but outside of the game is the marketplace, so to speak.
Oh,
It's
you
like-
can sell
I'd-
it outside of the market.
I'd say it's like I don't know if there's a yes. You can. It is designed to be sold inside the marketplace for no value. However, you can trade items in the marketplace. So third party facilitates that where you can trade and they facilitate the transaction outside of that marketplace.
Okay.
Still happening in the marketplace.
Yeah. Let me think about that one and circle back on it. I'm going to have
Okay.
my colleague that's coming in here in a little bit address that one
Cool.
because, like I said, I know there's some IRS guidance on it. It's just not something I've dealt with quite as often. So I want to make sure we're giving good guidance and not making anyone pay taxes when they don't need to. Does that work?
Perfect. Yeah, that
That's
works.
a
That works.
professional answer right there.
I like that one.
Thank you. No.
All right, cool. So
They don't like it when I just start going off the cuff.
no, and it makes sense too, and it is one of those ones where like that's something that disproportionately affects me because I do have skins that I bought for $1,000 in real money on the fake marketplace, and now it's worth 10,000 fake dollars that I can sell, and so I'm like, how do I exit this and not pay an absurd amount of taxes on this thing? But
Okay.
yeah, but
Got it.
we'll talk to your colleague in the second half. But Stock Jock, you're up. What
Awesome.
question did your chat
Yeah,
have?
my chat's got a really good question, and a lot of people might not know what this is. So if you could expound on it, it'd be great. What are the advantages for filing mark to market? And that's something that shows up a lot in questions in my chat for stock trading.
I
So
have
a lot of
no
people
idea.
might not know
Yeah,
what mark
that's-
to market even is.
What is this?
Yep.
Yeah, so that's a good one. So the mark-to-market election. So what you do when you do that, and it's for generally you're going to be day traders that are doing this. At the end of the year, they take all of those stocks and securities they own and treat them as if they sold them. So they say, okay, I'm gonna instead of waiting until I actually dispose of it, I'm gonna treat it year's end actually as if I sold it for what the fair market value is as of that date. And so I believe that in that situation, you get the benefit of, you get to treat 60% of that as long-term capital gain. And so you
What?
may get a favorable rate in doing that. And then you, let's see, 60% is capital gain. And I think you get the benefit of taking advantage of your losses that may be kind of baked in that you don't want to dispose of. But yeah, let me think about that one a little more.
Yeah.
And if we have
Yeah.
more kind of advantages,
60%.
we'll circle back on that.
What about the wash sale rule? Does that apply to the mark to market accounting method?
Say that again. What do you mean?
The wash sale rule, do day traders that use mark to market, is there wash sale at all in their realm? Does that not apply to them anymore?
I think that the wash sale rules do still apply to day traders. I don't know that there's an exception. If there is, I'll get my my partner to circle back on that. But I don't know that there's an exception to wash sales. Yeah, for
Fair enough.
for mark to market.
Awesome.
These are some doozies.
All right. I know, right? I I feel like they're not pulling any punches, and whoever is choosing the questions,
That's
great
good.
job. So, okay. Oh, this is right outside my chat's realm. What's the best free resource to find more information on the sector as it evolves?
On kind of the taxation of cryptocurrency.
On taxing, yeah. I guess what they're assuming we're talking about here, because when it was asked was cryptocurrency. How do we go about learning more about what I need to care about in crypto? Why did I say about that many times?
Yeah, absolutely. So I work for HRBlock, and HRBlock has a lot of great resources on the taxation of cryptocurrency. Specifically on our website, we have what's called the Tax Information Center. And so within the Tax Information Center, there's a lot of articles and kind of FAQs on cryptocurrency and a number of other tax topics. That's definitely an important one. The other one I'd say is the IRS website. And so because there hasn't been a lot of kind of legal guidance coming from Congress on how you're supposed to report and tax cryptocurrency transactions, a lot of this has been left to the IRS to come up with guidance on their own. And so they've done that. You know, they came up with initially guidance in 2014. That's when we learned, okay, at that point, we're like, is cryptocurrency treated like a foreign currency? Is it stock? What is it? And so that's where they clarified, all right, it's treated like property. In most cases, similar to stock is a good kind of parallel comparison. But then in 2019, again, they issued some FAQs as well with guidance. So that would probably be my secondary recommendation, is watch the IRS and see as they put out more guidance. Because, you know, like I said, until we get more laws out there, the IRS has to issue guidance to help us understand the tax rules.
Got it. Okay. So there you have it.
Okay.
To reiterate, the IRS has, I guess, some, resources, and then HRBlock also has some resources. So if you guys want to check out more,
Absolutely,
you know, check them out.
Awesome.
Next question, Stockjock, you're up.
Yep. All right. My chat was asking, what is the easiest way to track your crypto transactions? Like, at the end of the year, am I supposed to do all this manually, or is my broker, if I use Robinhood or Coinbase, do they give me something at the end of the year? What do I do with that?
Mm-hmm. It's a great question. Look, if you've got a few transactions, it's a lot easier to track and report it. In a couple of years, we're going to start seeing that brokerages are going to start issuing 1099s. There was a law that was passed at the end of last year. It was a larger infrastructure package, but part of that was a rule that required increased information reporting for certain virtual currency transactions. So we'll see that in future years. For now, you're like, all right, I've got this year, a few transactions. You may be able to just look at your account statement and say, okay, I can track pretty easily what I sold. If you're like, no, I'm across multiple exchanges and I've got hundreds or thousands of transactions, there are some really good calculators out there. Right now, HRBlock, within our DIY product, and then within our, kind of for our tax pros, we have a lot of guidance to help them with this process. And then we're working with some of these, there's some calculators out there. There's companies that specifically make calculators to help you track your basis and understand gain or loss, particularly for those people trading across multiple exchanges. So we're in discussions with some of the top ones right now, and hopefully we'll have a tool available in the very near future. But
Awesome.
For today, I'd say that, watch for that. And we'll hopefully have something to help you out with that through a partnership as well soon. So I won't name any names because there's so many out there that I wouldn't want to exclude anyone. But I'd say that if you Google crypto tax calculators, you're going to find some. And then if you give it a little time, hopefully HRBlock will have a partnership that will look valuable to you as well.
Perfect.
Awesome. Yeah, that was also a question I have, because it's kind of confusing, and like, it's not, they don't make it easy. It's definitely not the easiest thing to figure out across multiple different exchanges.
Yeah, I mean, that's kind of the problem with trying to issue 1099s, right? Is it's decentralized. So who is this intermediary? Who's in the middle that can always see transactions to know? And so that will be a challenge as we move forward. But there's a lot of other exciting things about this space that certainly outweigh that. And we'll all figure it out together.
Or
Great.
I'll pay you and you'll figure it out without me.
Yeah, I like that method a lot better.
Yeah. All right. I've got a question. How much are taxes on crypto for short-term capital gains? Jesus. Let me try that again. How much are taxes on crypto for short-term capital gains?
Yeah, so short-term capital gains are going to be taxed at your ordinary income rate, and that really varies based upon your income level. And so, what's the highest tax rate right now? I think it's 39.6%.
Yep, that's it.
So it really varies.
It
it really varies based upon your income level. And then when you have a long-term capital gain, that's where you get those, which is any capital asset, including cryptocurrency, that you've held for over 1 year. So not 1 year, but over 1 year. That's where you get those favorable capital gains rates, which up to a certain level, they're taxed at 0, and then they can get as high as 20%. And then some collectibles, so mostly capital gains are going to max out at 20%. A couple exceptions are there's some collectibles like baseball cards where you may get taxed as high as 28%. And then for particularly high income filers, there's what's called the net investment income tax, which may throw another 3.8% on there. So that's at the federal level. And then you've got to look at state taxes as well. So taxes are complex. You know, that's why you want to make sure you get it right. Don't pay any more tax than you have to, and don't leave any tax credits or other valuable deductions on the table.
All right.
Can I follow up on that real quick, Jericho?
Yeah.
You mentioned long-term capital gains taxes. Can you tell everybody the difference between short-term and long-term?
Yeah, exactly. So it's not really about the asset. It's how long you held the asset. So if you held it for over 1 year, it's considered long-term. If you hold it, whether it's a stock or a cryptocurrency, if you hold it for 1 year or less, it's considered short-term. And so that's where you get over 1 year and you get those more favorable rates.
Awesome. So
if
it's short
if you're
term,
looking to sell, yeah, go ahead.
Yeah. So if it's short term, like whether I make a $50,000 at McDonald's or $50,000 in the stock market, it's treated the same because it's short term. But if I hold something for a year and then I sell it, I get that favorable 20%-ish tax rate, right?
Yeah, and I think the difference on the McDonald's versus the short term may be taxed at the same rate, but when you're talking about wages where you're an employee, where you're getting it reported on a W-2, you're also paying into Social Security and Medicare for a portion of that. So it's about 7.65%. So there's other taxes you pay. And then if you're a crypto just investor, you're really looking at your capital gains rates. Whereas, maybe you're doing it as a business, then you may be paying self-employment tax.
All right.
Gotcha.
My chat's got a question for you.
Taxes.
Yeah, I was going to say, you set this up really nice.
I know. Look at that. It's like I'm a professional or something. So here we go, which I am. How do capital losses work with offsetting gains? Example, I make $25,000 on a trade, and tomorrow I lose $25,000 on a trade. What happens to me?
Yeah, so generally your capital losses are going to get to offset your capital gains, which means that you're going to reduce your taxable capital gains by your capital losses. And then if you have more capital losses than you do capital gains, you get to write off up to $3,000 of capital losses against other income, like your wages or other non kind of investment income. And so let's say you had a $25,000 capital loss and only $20,000 in capital gains. So you get to write off 20 against your capital gains, right? So I don't know where I'm putting my hand out here. You can't see that, but you get to write off the 20 and then 3 more against your other income, assuming you've got it. And then you're like, okay, I just lose this 2,000. Well, that becomes a capital loss carry forward. So you take that forward to next year and you use it to either offset your capital gains or again, up to 3,000 of other income.
I see. Huh. So that loss, I can only, at the end of the year, if I lost $10,000 on trading, I can only claim 3 of that against my other income, my McDonald's,
That's right.
my McDonald's wages.
Mm-hmm.
So for the next 3-ish years, 4 really, I'll do 3,000 against every one of those subsequent years.
So I have a lot of confidence in that next year you're going to have a big capital gain, and so you're going to use it all and not have to.
So if I make money, then I can use it all that 1 year.
That's right. Okay. You can use it against capital gains in future years. That's right.
Nice.
Yes, sir.
Well, I think that's going to wrap up the end of our first AMA, but don't go anywhere because the stream still has a lovely 60 minutes left. But we're going to say goodbye to Andy, who's done a fantastic job with us and all of our questions. Andy, thanks so much for joining us.
Rock star, Andy. Great job.
Awesome. Thank you all. It was a lot of fun. Thank you for having me.
All right, and we're going to swap him out for another tax pro who's going to be answering some of your guys' questions as well. So while we wait for them to do that, chat, reminder that this is the first HRBlock sponsored kind of tax Q&A for you. There's going to be another one in a couple weeks. So if you missed this one, make sure you keep your eyes peeled for another one. If your questions didn't get asked in the first AMA, better news, we've got another one coming right up after we do a little bit of another quiz. It's going to be Can I Deduct It? That should be fun. I'm looking forward to that.
I learned a lot on that first session of Can I Deduct It?
Yeah,
Who knew? Who knew? Stakita Chiquita. I can deduct part of you. And if you start making money, whew, we're in business.
You know, that's what I should have asked. What happens if she becomes an influencer? You know, she's not even living, but she's
could. Well on her way. She's well on her way.
Reminder that no question is a bad. I mean, that's a lie. There are plenty of bad questions, so do your best to ask not bad ones. If you don't already have the AMA extension enabled, make sure you mouse over the stream. It should be on the left-hand side. Make sure you enable it. That's how you're going to ask questions and vote on the AMAs in about 15 minutes here. So it's good to have you guys. Also, shout out front page. Yes, this is live. Any other questions? No? Wonderful. Man, so McDonald's, you threw a couple fast food stuffs out there. Is that your backup plan if this year doesn't go so well for you in the mother's basement?
Well, I always have a backup plan. I mean, I'm trading, made $1.3 million last year, but you always got to have a backup plan. I currently work at fast food. I mean, it's just a thing. I don't want to give up my roots. You know what I mean?
Yeah.
It's where I started.
You can't abandon your home.
Be loyal.
Oh man. We're loyal, but we're also gonna set Andy aside because we have Mike. Mike, welcome. Thanks for joining us for the second half of the stream.
Hey, no problem. I'm glad to get to meet you guys and get to follow up on Andy.
Hey, yo,
Andy
Mike.
had to talk about.
Yeah. Do you want to give us a little rundown of how long you've worked with HRBlock, what you do over there?
Sure. I've been with Block for about 12 years now. I actually started on the same day Andy started. It's weird enough. I manage a team that tracks tax changes for the company and that helps develop our products.
Nice. So you're very much up to date on all the nuances that are coming out of the crypto world, the gaming world, hopefully. So you're the man to ask.
Yeah, unfortunately.
Unfortunately. All right, well, let's get started. We have a little mini quiz for both our chats. Chat, if you guys want to play along, this is Can I Deduct It? We're going to hit you with a series of questions. You're going to tell us whether it's true or false that you can deduct certain things off your taxes. Question 1, can I deduct my subscription services? So I'm going to assume this is Netflix or Twitch streams,
yes.
Or, you know, anything that you're paying monthly into. Can I take that off of my taxes? If I had to guess, I'm going to say no. I'm not really sure. Stock Jock, what do you think?
I'm going to say it might be situational if it helps you with your job. I don't see how that can't be an expense.
I didn't think about that. If I'm like doing opposition research on other people's who are content creators, subscription-based content, maybe I could write that off. My chat is solidly just saying no over and over again.
Yeah, mine's saying no too. They're not buying into it.
Yeah. Okay. Well, let's ask Mike. Mike, can you write off subscription services?
Sure. So with subscription services, now your typical ones like your Netflix, your Hulu, whatever, like those, probably not going to be deductible. That's pretty straightforward. That's a personal expenditure. There's court cases out there where, like, movie producers back in the day when you would rent VHS tapes, with like somebody who was like getting in the business of making movies, try to write off his rental fees at Blockbuster or whatever it was back in the day, and the court says no, you can't do that even if you're in the business. Other types of subscription services like your Twitch subscription fees might be deductible if you're in the business of what streaming on Twitch. Now the real thing is where you have to weigh it business versus personal. So let's say you're on Twitch watching your favorite streamer 45% of the time, and then the other 55% of the time you're using it for business. You'd have to prorate your deduction by that amount.
So probably not worth the amount of effort that you'd have to go through saving $5 a month, or really any subscription service on.
Yeah, the business versus personal allocation is something that gets scrutinized a lot. It's possible if you track your minutes and stuff, but it can get pretty hard to do if you're just bouncing in and out on the internet. Okay,
cool, fair. But overall, it really comes down to if I'm paying for like an Adobe subscription service product, I can write that off because I'm editing and using it to make work stuff. But if you're just doing it for fun, the answer's no.
Yeah.
All right, cool.
Okay.
Yeah, that's
Fun
exactly
is not
the
text.
case. If it's business use.
If it's fun, you can't deduct it. All right, question 2 for chat. I lost money on a meme coin. Can I deduct my losses? I put my whole life savings into a coin that was run by an amalgamation of a dog. Please tell me I can write it off, or else my family's starving.
Yes.
Chat, can you do it? I mean, I'm gonna say,
There's a lot of Doge holders out there. They want to know.
yeah. A lot of people are saying yes, that you can write off your losses on a meme coin.
Yeah, I'm seeing yes as well.
What's the meme in stocks? Is it like can't take losses if I never sell, or like
That's right.
You know,
You never lose. That could be a life lesson too. You don't take losses if you don't sell.
yeah, you just
Perfect.
never sell and you never lose.
Diamond hands, baby.
Yeah.
This is
Eventually, it goes to the moon. Everything goes
Mike-
to the moon eventually. It just matter when that rocket ship goes.
no. None of this is financial advice. Mike is sitting here like I can't even be.
No, that's wrong. It's wrong.
Like,
Oh yeah, it doesn't go to the moon.
all a
Yep.
joke.
This is not
all right,
financial advice.
Mike,
Don't
what do
sue
we
me.
do? Well, yeah, please don't sue us. What do we do if we lose money on a meme coin? Can I deduct my life savings losses?
So like if you do lose money in a Dogecoin, like what you mentioned earlier, taking bad stock tips from Elon Musk, you can to some degree. I probably should have said that. Yes, you can. Under the
We love it
investment
here.
rules.
Stoke the fire.
No, I would say under the investment rules that Andy outlined earlier, yeah, you could claim a loss for that coin, so, assuming you just like actually sold it. Now, if it comes completely worthless, but you still own it, but it might still have a point where it might get value again, you can't really. But let's say the coin just completely disappears off the internet. There's no price for it, indexed anymore, but you still technically own it. Then you could claim what's called a worthless security loss. But for the most part, yeah, if you lose money on something like this, you can take a loss once you dispose of the coin itself.
Gotcha. So once you sell and get rid of it, much easier to do that and just say and start over than it is to try and hold it until it gets delisted, I'm assuming.
That's not financial advice, though. He's just
That is not.
theoretically speaking.
Yes, theoretically speaking.
Theoretically
Okay. I mean, it's because it is complicated, but we do have I guess I'll call it one that seems near and dear to my heart. So I work at home. A lot of streamers, a lot of content creators do, not even just streamer. I mean, you technically work at home, Stock Jock.
My mom's basement. It's close enough.
Yeah, close enough. I mean, yeah, So since I stream at home, can I deduct my rent on my taxes? I know the answer to this one because I've been doing it for a minute. And this one is, I guess, kind of similar to the first question that we had about, I don't even remember what the first question we had was. Oh, the split, the subscription services. So I feel pretty good about this one. Chat's saying yes.
Yep.
What about yours?
Yep.
Yeah.
They're all over that
chat's,
one.
you and chat are correct. You can claim if you use. There's a special rules for this, but there's lots of requirements. But there's a thing called the home office deduction and it's generally only available for people who are self-employed. And the main rule that we always focus on is this rule called the exclusive use rule. Mm-hmm. And so you can claim your rent as a deduction, well, at least a portion of it, for a space in your dwelling or house or home, apartment, whatever, that is exclusively used for business. And that requires a proration, just like in the business versus personal we talked about with subscription services. So let's say the room you're in that you only use for streaming is 100 square feet, and the remainder of your house, overall your house is 1,000 square feet. You can then, under the rules for the home office deduction, you could claim 10% of your rent. Mm-hmm. There's other rules related to that, so you can't take the deduction in excess of your income, for one thing. I will say that this is a very highly scrutinized deduction, so being able to prove that space is only used for business purposes is one of the most critical factors in that deduction. And that's where people get tripped up the most.
Right. So let's take a second to kind of talk about this, because when I was living at home with my parents, they were also looking
Good
like
man.
Stock Jock, yeah. Like they were also looking at, well, you know, downstairs in the portion of the basement, he only is using this for business. You know, it's where I made my videos, it's where I live streamed and stuff. Can we write off that specific portion that he's using for it, even though, you know, we entertain the idea of me paying rent to them for that office space and then writing that office taxes. I don't think we did that. I think it was incredibly difficult and not worth it in the long run to try, like you said, prove that it's being used just for work. But what about you, Stock Jock? Like your situation's a little bit different with your mom's basement.
For me, it's more like upkeeping my office, or what I like to call my office. Like, can I buy things to help upkeep it? Like, I bought a really awesome vacuum recently that I only use in my office. Can I deduct that?
So to answer both your questions, so you're right on with the rent arrangement. To be able to qualify, your parents be able to qualify, for you to be able to qualify for the deduction while you were living with your parents, you would have to be essentially paying them rent, and there'd be special rules where you'd have to essentially establish that this was an actual legitimate rental agreement and all that.
Right.
And then on the other side, when it comes to the cost of maintaining your home office, that is deductible again under the business versus personal rules. It's, again, you have to be actually claiming the home office deduction to be able to claim maintenance expenses related to it, and also, let's say, other stuff that's in that office. For example, if you want to claim a deduction for carpet or whatever. So like in your case with the vacuum cleaner, that would be deductible so long as you did, in fact, have an eligible home office or a legitimate home office deduction already being claimed.
Nice. Okay,
Sweet.
cool. Pretty simple. Question number 4, one that's near and dear to my heart. Can I deduct my houseplants? Chat, this one is for you. If you think you can deduct houseplants, let us know in the chat. If you don't think you can, let us know why. I don't have any in my background, but I usually do. I'm sure that might change the answer if I just start using it as props in set design instead of just having my collection of houseplants in my living room. But I feel like a lot of these questions toe that line between what is being used for business and what is something you just have. Let's see. Looks like a lot of no's for me.
Yeah, a lot of no's. I like the being a prop, though. I mean, if it's a prop, maybe so.
Right. That's really the only thing that I could think anybody would be able to write it off on. It is a decoration, I guess. But all right, Mike, what is the answer? Can I deduct my houseplants? Or if I can, how do I do it?
Probably not, unless, again, if it's a prop, or it possibly could be under the home office rules too. But again, that gets a little iffy there because it isn't necessarily an item that you need for the home office to function. But decor would qualify. So like if you were to paint, like to some degree, I believe it would be deductible, but it's a little harder hurdle to cross. So I would say under the home office deduction, probably not. But if you're using it as a prop, or if it's a part of your background, yes, I think that would qualify.
Okay.
Sweet.
Gotcha. I have a friend, a personal friend, who has most of their houses covered in plants, and she's asked this question several times. She doesn't make money with her plants, but she uses them all the time in her social posts and stuff. Does that change at all? Because there's a lot of them too.
Yeah, it gets a little dicier there. If the sole purpose for acquiring the plants was for social media posts, I think that would be probably legit. But if she would normally otherwise have those plants in her house and have them for her own personal enjoyment outside of this her work, their social posting, it's probably not going to work.
So if I went out, I recently bought my mom some really nice lavender plants, and if I went outside and ripped those up and put them in my background, because the original intent was for my mom's garden, I can't deduct that now that it's in my office.
Yeah.
It's
well,
nice
at
lavender.
that point, that's essentially. Yeah. So at that point, if you're using it as a prop for your background for your streaming, there's a rule for property that's been converted from personal to business use, and so at that point, it could essentially probably be considered a business expense.
Lavender's mine.
There you go. So yeah, it could be considered a deductible expense. There's a bunch of rules on how you would value it. You would calculate the value on that. We won't go into because it gets interesting, because you wouldn't necessarily be allowed to take the deduction for what you originally paid for it. But that's a whole different area.
Gotcha. All right. Well, that's I mean, hey, I'm glad we got to ask that, chat. Now's the time for you to ask your specific questions using the AMA extension. I talked about it literally 14 minutes ago, so if you've already forgotten, don't know what to tell you. It's on the left-hand side of your screen. Mouse over there. Follow the rules, exclamation AMA, and then your question that you have in the chat. Once those get submitted, we're going to choose a couple of them, wait about 3-4 minutes, and then you'll be able to vote on that. So submit the questions now, and we will let you guys know when it's time to vote. In the meantime, Mike, why don't we take a little second to revisit some of the questions that Andy kind of passed off to you. I think the main ones were dealing with selling digital products on a closed marketplace that have assigned it as not real value, but being able to being able to, one hand, sell it off the market for real money, and then on the other hand, just have a lot of usable currency that you can't trade for money.
So the IRS, it's interesting because this all became light more as an issue when, obviously when crypto became a thing. So if I recall right, if the money is generally only used, you earn the money in like the stream marketplace by selling, whatever, and you buy stuff in the marketplace, it's really not transferable to cash, and it has no assigned value there. It's not taxable. It doesn't trigger any tax consequences. Now, let's say I don't know how this would work, and I only play a couple games on Steam, so I'm not very familiar. But if you were to, let's say, somehow sell it outside the marketplace, so you acquired a skin or something in the marketplace, it's somehow, you're no longer using it, and so you decide to sell it to a third party outside of that marketplace and for actual legit money, then you're going to have gain. And that gain, unfortunately, because you originally didn't pay any money for it, and real money for it, is essentially going to be the entire amount that you received.
Wait, no! Wait, hold on.
I know, right?
Wait, please, hold on. So, okay, all right. So if I purchased for real money, though, on this digital platform, I spent $1,000 for this item that technically has no value, right? So there's a transaction where I have spent that. And then I turn around and sell it for $10,000. Technically, all they see is the transaction in and the transaction out. So would I still have to just say that's 10 grand gained?
That sounds like a $9,000 gain.
That's a $9,000 gain. I didn't realize that. Okay, you bought it with real money.
This is a similar like tangent. No, but the way you said it, if I just got a random drop and it was worth $10,000, I have a $10,000 gain I have to report if I somehow sell that out of the marketplace.
Yeah. So what those are called are essentially it's interesting what they're called. They're called Section 197. Yeah.
I'm not committing fraud. I'm just learning that it may be happening as I speak. No,
I got a follow-up once you're done answering that.
Yeah. So those are called 197 intangible assets. So like when the person who originally created it, they had zero basis in it because they didn't spend any money to create it.
Right.
Now, when they sell to you, it's essentially a capital asset to you, and so they only recognize gain to the extent that their basis would be zero. You now have basis in it of $1,000, and when you later on go on and sell it, then you have a gain of $9,000.
Perfect. I got you. Just before you ask it, Stockjock, real quick reminder: if you guys have questions that you've submitted, go ahead and vote on the questions. Even if you didn't submit one, you're free to vote on the AMA extension. The highest rated questions will get asked, so make sure you do a good job and upvote the ones that you want to see. You've got a minute, and in that minute, Stockjock had a question.
Yeah, let me follow up on that. So, say you're playing a sweet game and you get the ultra rare whatever it is that's worth thousands of dollars outside of the game, but inside the game there's no value to it. Do you have to pay taxes on what the third party, the market puts on that, even though inside the game there is no value, no monetary
that's
value?
Interesting. Yeah, that's interesting because it really depends. I believe it depends if there is an open marketplace for it at that time, I believe. And so if you do somehow acquire something that's worth $1,000, I'd have to check with, to make sure. But I think at that point, you might have a taxable transaction when you receive it. But I am not 100% sure.
I just got to stop gaming, man.
I know.
This is costing me too much money.
What's crazy too, because this is kind of like the premise of NFT gaming is play to earn, like as a whole. And so this is like a very important thing. If you've even remotely thought about engaging in Web3 games, like I hope you're paying attention, because that's not something I've
Again,
thought
I'm
yet.
not 100% sure. Yeah,
No.
I'm not 100%
Okay,
sure on that.
fair
so don't
enough.
get me on that one.
Fair enough.
Yeah.
But it's at the very least you should pay attention, because this is going to be changing every 6 months until they finally lock down some rule, I'm sure. All right, let's get into the
and Mike,
AMAs.
how is the IRS even close to coming anywhere near like the crypto NFT gaming space, or is this so new that it's ever evolving?
I think I can't speak for the IRS myself, obviously, but I would say just knowing how they were kind of behind the ball on cryptocurrencies when they first came around, and it took them several years to get up to speed. I don't think they're in the mood to let that happen again. So they're probably watching these spaces a lot closer.
Fun.
They're watching this stream, that's for sure.
Yeah, Mr. Age, if the IRS is here, can you guys waive my late file fees from like 2016? It's been haunting me, and I just like, we do have the AMA questions that you guys have asked, and this one is great. This one is from my chat. I play a game called GeoGuessr. It is a game that exists online. It puts you in a random location anywhere in the world on a Google Maps spot, and you have to guess where in the world you are. If I wanted to take my game to the next level and travel to these locations to do location research and better my score, can I write the travel expenses off on my taxes because I'm making content and I'm engaging in this thing that's about my work?
Okay, two things on that. First, I'm actually very aware of what GeoGuessr is. I have a site blocker extension on my work computer because I was going to that site too much during the work hours.
My man!
It's a very
so good.
It's a very addictive
He sits
activity
home.
to try to
You can
figure out
tell.
where you are.
His heart's
Yeah.
So there's a lot of court cases are related to like travel to better skill, to improve one's skills. Like the classic example is the high school French teacher who goes to Paris and tries to deduct her travel, just to try to immerse herself in the environment and get better at speaking French. And the IRS and the court cases along it have all kind of said, no, that's not good. That's not enough.
Right.
There has to be some legitimate business being conducted versus just improving skill. So yes, traveling to locations that you've seen in GeoGuessr, learning how to read Russian road signs so that you can figure out what part of Russia you're in.
It's so hard.
I was really rooting for you, Jericho. I was rooting for that one.
Yeah, so it's not deductible.
Okay, well, good to know. That does crush a lot of my content plans, but I'll reach out to you and we'll figure out a loophole or something. I just gotta make YouTube videos about it while I'm there. It's fine. But Stock Jock, you're up. Give us your question.
Okay, this one's interesting. My chat's thinking like 5-dimensional here, so it's even blowing my mind. If Stock Jock takes a big trade loss just for entertainment purposes for his Twitch business, is that a double deductible as a business expense and a capital loss?
Great question.
Man, I really hope you answer a certain way, because there's a lot of things I'm going to be trading tomorrow.
So, unfortunately, no. There's a lot of rules in the IRS that says there's a prohibition of double deductions. So something that gives rise to a deduction one place can't give a rise to a deduction somewhere else as well. Mm-hmm. And so it's going to probably be limited solely to the capital loss.
All right, fair enough.
I'm just like,
which is still
can I double dip?
Yeah.
Right? I'm trying to imagine. So your chat's saying like you just invest in meme stock and then you just take a fat loss to just offset taxes later on down the road?
Maybe,
like,
I don't know. Maybe they hit a goal or something with a dono goal, and I'm just like, fine, we're sending it down to the burning ring of fire, and we just absolutely crush a red trade. Absolutely belly up. I don't know what they're thinking. Double dipping, not happening. Sorry, chat.
Yeah, the 100K loss in one day challenge brought to you by Stock Jock. Yeah. Sponsored by
that'll bring them in. I mean, shoot. It bring in the views. How is that? I mean, I guess I can't double dip, though. It's still a capital loss.
Yeah.
I'll take it.
Yeah. It should still be a capital loss. Yeah.
Jeez. So, I mean, I saw in chat, somebody said the goal to lose 100K in a day, but I mean, this is tangential. What is the most that you've lost in a day, Stock Jock?
Oh my gosh. All right. Most I've lost in a day, like, if people need to know, $42,000 in one day. Now, Jericho asked me how much I made. What's my most I've made in one day? Go ahead, Jericho.
Question 3. Let's. No, I'm just kidding. How much? Go on, flex it a little bit.
$200. No, just kidding. 82K, but that's regardless. It doesn't matter. I'm not taking no 100K loss just for views.
I don't know.
Unless
it could be
I get like 100,000 subs or something, then we could talk.
I was gonna say, oh my God, what about incentivizing a loss with paid subscription? There's probably something there. We'll get to that in a second. Chat's got another question. Are there any advantages to filing your taxes if you're under the minimum income? Like if you're a college student with a part-time job, for spending money? I don't understand what that means. College student with a part-time job for spending money. Don't know if that makes sense, but I guess, are there any advantages to filing your taxes under minimum income?
That's one of the classic situations where we would encourage someone to file, even if they don't meet the filing requirements. Because if you don't meet the filing requirements, it's essentially a guarantee, not guarantee, but you're going to probably get all that withholding back, because the filing requirements are based on the threshold when income becomes taxable. All income's taxable, but there's a threshold based on your filing status that says, okay, you're in the 0% bracket until you hit this mark. So if you're below and that mark is also the filing thresholds. So if you're below the filing thresholds and don't have to file, but you have withholding, typically you can get all that money back as a refund, because you're not going to have any taxable your taxable income is going to be 0 at that point.
Got it.
Is there?
If that makes sense?
Yeah. Oh, go ahead. Sorry.
No, I was just going to clarify. People were explaining that the only reason you, as a college student, would have this job is so you could use that money to, like, go for drinks or whatever. It's not like you're not living off of it. It's just for whatever.
Yeah. There are other reasons why you might want to file. Certain credits you might be eligible for, like the earned income tax credit. If you're a college student, you might qualify for an education tax credit. So there's reasons why you might want to do that.
Okay.
Okay.
Do you have a question, Stock Jock?
Is there any situation where you only made, I don't know, maybe you're a student and you only made 2,000? Is there any situation where you don't have to file taxes or is you every year regardless of how much you made?
No, so if you're below the filing thresholds and you don't meet certain other criteria, you don't have to file. So I don't know what the filing thresholds are for this year, but they're usually based off what's called your standard deduction. I should know those off the top of my head. I don't. But if you're below the filing threshold in any given year, you're not required to file. Now, there's certain situations where you'll be below the filing threshold where you are required to file. And like, for example, self-employed individuals, if you have self-employment income of at least $400, you're required to file. And that's much less than the filing threshold.
That maybe we talk about that for a second, because that is going to be a large majority of people who do any part-time Twitch streaming or commission work, etc. So if you're self-employed and I stream on Twitch and I make $450, I'm legally required to file taxes on that, even though it's well below the threshold.
Yeah, that's because of how the self-employment tax works. The self-employment tax doesn't have a threshold necessarily, but it really doesn't kick in until you hit $400 or more. And so while you might not owe ordinary income tax, so the income taxes you would typically pay on wages, you're still going to pay what's called the self-employment tax, which is similar like what the Social Security and Medicare you get withheld from an employee would have withheld from their wages. It's except doubled essentially. It's a 15.3% tax on your income from self-employment, and so that gets triggered at $400.
Gotcha. And I guess one last thing to add on to that, if you're working a summer job or winter job shoveling snow, like what's the deal with that? Because it is a cash-based business presumably, and you are earning income, and you should file. You can answer this or non-answer this in the whatever way you feel comfortable, but there's several people in chat like, what am I supposed to do about this?
So that's a very common situation for cash-based businesses to not ever receive a reporting document. It's still taxable. So if it's upon you to be,
Good citizen.
file to essentially honestly report your income. But yeah, that's another thing to point out. So most people who are self-employed will get a document that reports their self-employment income to them from whoever paid them. If they're doing certain types of work, it'll be on a 1099 NEC, which stands for non-employee compensation. And so that threshold's $600. But again, that's just the threshold for where you get that document. It's still taxable income. And then there's also another form called the 1099K, which you might be familiar with, because certain web services will issue that. That's a different document that is issued to report credit card swipes, essentially, or people receiving income through platforms. I believe like Twitch would be one of the ones that would issue that. That one has a much higher threshold, but it's I believe it's $20,000 for 2021. But the IRS has changed because that threshold was so high. That the government actually came and lowered that threshold starting in 2022 to $600.
From 20 grand to $600.
Yeah. So it matches the 1099 NEC document.
Cool, really fun, really cool. Love that for us. Stock Jack, you guys have a question now.
All right. This one I'm just going to read it verbatim and let you run with it because it might be a little off, but should I request my broker to use mark-to-market reporting before or after I file for trader tax status or mark-to-market accounting with the IRS?
First of all, that brings up a good question and relates back to what Andy was talking about. Generally, you're going to want your broker to know that you've done the mark-to-market election. But beware, the mark-to-market election has to be made essentially at the beginning of the tax year that you're wanting it to be effective for. So I forget the time frame for it exactly, but just be aware you can't make it after the fact. And so at the time you make that election,
April.
That might be right. But you need to make sure you have it in place early in the year. Otherwise, it won't be in place until the next year. That makes sense. And then
after that's done, I just tell my broker.
I would inform your broker that you made that election. But honestly, I don't know how brokers typically go about reporting mark-to-market, if they're going to actually accept it, or they're just going to be like, okay, here's your brokerage statement. Here's how you need to go. You're going to have to go look at essentially your December 31st brokerage statement to see how to make those allocations. To go back to something Andy mentioned about the mark-to-market earlier, whether or not the wash sale rules apply, I don't get to do this much where I get to say Andy's wrong, so this is really good, nice for me today. The wash sale rules do not apply to the mark-to-market election. So that's one advantage of it.
So as a day trader, I don't have to worry about any kind of wash sale stuff because I have mark-to-market accounting. I've already told the IRS for that, and that's in place.
Typically, yes. Yeah.
Gotcha. Cool.
Now, if you have... Go ahead.
No. This is all you. Keep going.
No, some people who do the mark-to-market election will also have a standard. They'll have one brokerage account where they do the mark-to-market, and then they'll have another brokerage account where they're just doing normal transactions. They're not day trading as much. They have just a hold, like a buy and hold type account. The mark-to-market election will only apply to the investment account, essentially, that you say it applies to, or what investments you say apply to. Most people just say the investments in this account. So the other brokerage account will still be subject to the wash sale rules.
Is that account eligible to take advantage? Like, say I bought whatever stock, held it for a year. Is that mark-to-market account eligible for capital gains after a year, or no?
Yeah. Yes,
it is. Oh,
yeah,
great.
It's not, I believe it's not uncommon for people to have essentially a mark-to-market account where they do their active day trading, and then also having an account where they do their buy and hold transactions.
Oh, so I'd have to have it in a separate account, the long-term stuff?
I believe you do it that way, or you have to essentially be able to identify this is the one that it's a little hard. The reason why they do it separate is because it's harder to say, okay, these are the stocks that the election applies to. These are the stocks that the election doesn't apply to. So most people, when they do that, will separate them out into two separate accounts.
Got it.
Awesome. All right. Question from my chat, and I'm going to break this into two parts because it has a year date on it. I was always under the impression that anytime I was paying my friend for dinner or paying back friends or for nights out on drinks and stuff, that was just fine to do. Are friends and family transactions based on PayPal, Venmo, Cash App, whatever, are they still tax deductible? Tax exempt this year? And a follow-up question, were they not ever? Because that's confusing to me.
So that's kind of goes back to that 1099K I was speaking of earlier. It's very easy. So the best way to put it is a lot of times those platforms don't always know what you're using that money for. So if I transfer money using PayPal to my sister to pay just as a gift or whatever, they don't necessarily always know that off the top of their heads. I know Venmo, you can say this is for service provided, or this is for a gift. But the issue is that you're still essentially doing a credit card transaction. You're essentially saying, pay this person from a credit card or debit card transaction. So what will happen is people sometimes will run into the issue where they'll get issued 1099 reporting these transactions that have gone in and out, essentially came into their account for personal things. And so at that point, it requires and I don't know how common it is now, but there was an issue with it, when the 1099K first came around, but it might be more prevalent now because of the prevalence of Venmo. I just haven't seen a whole lot of it recently, but what to get to the chase, no, those transactions are still tax exempt. That's essentially, I'm paying my friend for my share of the meal, or I'm I'm sending a gift to a relative. That's not a taxable transaction. The issue is there are situations where you might get a document reporting that transaction, and while the IRS is going to assume, okay, that's taxable because they got they get a copy of the document too. The trick, it's not a trick, but the thing you didn't have to do is back that out of your taxable income. There's various ways to go about doing that. And a tax professional knows how to do that pretty well, and make sure it's designated like, hey, of this, $5,000 I got on 1099K, okay, $3,000 were received for business, $2,000 were, gifts. And so there's ways to back it out. Okay,
cool. Because I, again, was just under the assumption that every time I did this as a friends and family, I know PayPal has this, and I don't know if, I guess Venmo does. I'm not really, can't really remember. I don't use it that much for sending money out. But I went on a vacation with my friends recently, and I booked the room, right? And we shared a big room. And so I received a large amount of money from my friends, and I got a 1099K or whatever that said that I had earned income through these apps, but I had never actually done any business transactions there. So I wasn't really sure what the whole issue, I wasn't really sure what was going on, and I heard that I saw some articles saying that this was not going to be the case in 2022 with the tax exemption. So I guess, can you go into more detail? Like, I have this 1099K. What am I supposed to do to get this removed from my taxes?
So if you do get a 1099K reporting income that's not income, money's received that's not taxable, there's a way you can back it out. There's various techniques for doing it, essentially, but the way most people do it is by taking a deduction for it, like essentially putting a statement to the returns, like, here's the amount I received on 1099K. Here's the amount related to non-taxable personal transactions. Here's the actual amount that's taxable. And, if it nets out to zero, it nets out to zero. Another way, if you're using, one thing I might recommend is if you're using, let's say, Venmo for both, or PayPal for both personal and business transactions, try to separate those out. Okay. And by that I mean, one thing in the classic sense of regular bank accounts, it's always recommended to keep your business transactions separated from your personal transactions. The easiest way to do that is separate accounts. Separate accounts is the cleanest way to go about doing it.
Yeah, when you say it like that, that does make a lot of sense. I'm not really sure why I never split those up, but I should probably do that. Let's keep it moving. We've got question number 6 from Stock Jocks chat.
Yeah, I don't go out often, so none of that even mattered to me. Sorry. Just kind of hanging out in my mom's basement all day long. Nice and cozy down here. All right, I got a question for you.
Sure.
For day trading specifically, are you taxed on the net gain or loss basis or the individual trade gain loss basis? Not really sure what they're meaning. I think they're meaning like at the end of the year, you've got, $100,000 of buys, 100 or 50,000 in sells. Your total is 50,000, or is it per trade that you make? Are you taxed on?
it should be per trade. If during the year it's per trade, and then at the end of the year you get taxed on like whatever the gain is in the you know, at the end of the year. I wonder if one thing they might be asking about is you're gonna have your trade, your actual basis. Let's say I buy a stock for $10, that's my basis, and it goes up to 20. Let's say it goes up to 30. So, you know, my initial gain you would think would be $20, but there's probably going to be a fee of like $5, not $5. Let's say a couple dollars for the trade to go through. No, yeah, commissions aren't as common as they used to, but they're still there. So that basis, essentially, you increase your basis, or I forget if you reduce. Anyway, their gain would not be $20 anymore; it would be $18.
Got it.
Got it. That's good.
I mean,
and that's going to be on my broker statement at the end of the year. They're going to give me that, and that's what I take to you all.
Yeah, and they should net that out for you already. If not, then that requires some digging through your brokerage statement. But usually they'll do the net for you.
And as a day trader or anybody that may be just trading here and there a little bit, do you have to pay quarterly taxes? Because one quarter you could be very green, and then the next quarter you could be very red, and maybe even red on the year. You know, how does quarterly taxes work?
It gets complicated. Generally, you know, your average trader won't probably pay quarterly taxes. Now, if you're regularly selling stocks at a gain, let's say you've been holding on stocks for years and years, and they're all in the green, you know, you might want to consider, you know, either
quite often.
setting aside some money when you do the transaction to just go into an estimated payment. There's a couple of different ways you can go about doing that. You can use the quarterly method, there's annualized method. But yes, generally, if you're going to be in the situation where you're going to have there's different thresholds for when estimated payments are required. But if you're going to be in that situation due to stock transactions, you should probably go ahead and make estimated payments. And I think people, a lot of times, one thing with estimated payments is you don't have to necessarily do them on a quarterly basis. You can submit them to the IRS as many times a year as you want. So let's say you do have a couple big transactions just 2 big transactions in a year. You know, do some math, you know, whatever the taxes on that. So let's say if you're in the 15% bracket, take 15% of those sales proceeds of that gain, and you can wire transfer EFTPS it to the IRS with your information, and it'll be applied as an estimated payment for that transaction. I think while quarterly payments are important, you can make as many as you'd like during the year. I mean, there's certain times when you have to make quarterly, but there's also, you can always, if you have a big financial windfall that you know is taxable, you can always make extras throughout the year.
Huh. I didn't know that you could pay more than quarterly. So I thought it was just, you got to do quarterly. All right, there you go. Just pay every week.
That's my favorite thing to do, is pay the IRS. So I'm going to do that more often now. I can't wait.
Yeah.
Yeah, that'll be fun. All right. I have a question from my chat that I believe I understand. It is worded interesting. Can I write off anything if I work from home, but I work for a company instead of a personal business? So I assume this means kind of what I have set up. So I have an incorporated company, I pay myself a salary, but can I write off things because I am still working at home, but I'm working for a company?
So that's interesting. Well, this goes back to 2018. It used to be the case that you could do that. It used to be the case if you were a Form W-2 employee, you know, receiving a traditional paycheck every 2 weeks or so, but you were required to work from home, meaning your employer essentially didn't have a place for you to work at their place of business, or in your situation, your place of business was your home. You could claim the home office deduction. However, as part of the I forgot what the name of the act was, but part of some tax law that changed back in the day, that essentially changed, this is back in 2018, the allowance for employee business expenses, including the allowance for an employee to take the home office deduction, went away. So since 2018, employees cannot. And now I know now in your situation, that also applies to you, even though you're essentially a one owner business, that kind of applies to you too.
Yeah.
Because you are considered a W-2 employee.
Right. Yeah. And I'm aware of that change, but so we didn't roll that back, despite the pandemic virtually forcing people to do the very thing this would have very much helped, right?
No, it didn't get rolled back at all.
Sick.
Unfortunately.
Of course
Cool.
not.
So yeah. So I guess and since my situation is a little bit different because I am the sole owner of the company and sole employee. As far as I understand, I just use my company credit card. Anytime I'm making a purchase for something involving work, I just don't use my personal credit card. But I could use that and reimburse myself, correct?
Yeah. Yes.
Okay.
And that's how that would work. Essentially, you can still like make it personal. You can use your personal card to make buy stuff for your business, but there has to be what's essentially a reimbursement policy saying, okay, I go to my company. I know you're the company, but essentially going to the company and saying, hey, I bought this. This was for business. And then they have to reimburse you. And essentially, if that's the arrangement and they don't reimburse you in excess of what you paid, or you're required to return any excess, or if they do give you excess, you're required to return it, then that works. Otherwise, you would run into that pitfall where it wouldn't be deductible.
Got it. Cool. All right,
Awesome.
we got another one from Stock Jocks chat.
Yeah, here we go. I think this is going on along the lines of the wash sale, but in terms of crypto. So can you sell crypto at a loss, rebuy the crypto immediately, and claim that loss?
So what
Oh.
we've seen, and I would have to check for again, but I'm pretty sure the IRS has not came down on the wash sale rules for crypto. So I don't believe it applies to crypto.
That
Yes.
seems fun.
Let's
What
go.
does that mean though? So like I guess
So yeah,
like what would be
not
the
a lot of
benefit
people
of that?
not a lot of people know what wash sale is. Do you mind expounding on that a little bit?
So a wash sale is where you essentially sell stock and then immediately, it's hard to describe because there's different ways it can happen, but essentially where you sell stock essentially on its way down, and then within 60 days, within a 60-day period, you repurchase that stock, the same stock, not the same actual shares, but the same indexed share. The IRS says the losses are not allowed there because essentially it's like you trying to take advantage of a stock going down and then getting back on for the ride up. Now, that doesn't mean you lose that loss. Essentially what happens there, instead of getting to take that loss immediately, that loss gets added to your basis in the newly acquired shares. And then eventually when you do sell the stock in a transaction that's not a wash sale, that amount gets essentially offsets any future gain. It doesn't mean you completely lose it. It just means you can't take it at that time.
Got it.
And this doesn't pertain to crypto at all, though. You can do wash sales.
I believe no. Yeah, I believe as I've read it, and Andy might correct me on this one, is that the wash sale rule only applies to securities in the traditional sense.
All right.
We saw a lot of that. We saw a lot of that at the end of the year last year. A lot of things being sold and then almost immediately being rebought as people were harvesting. The term harvesting losses was being flown around quite a bit in the crypto world.
Yeah. Very interesting. So from my chat, does the type of business decide what kind of write-offs you can do? And I guess this goes from a perspective of, am I an S Corp, an LLC, like, am I a partnership? Does that change what I can and can't write off? Or if I'm an employee of a specific business, does that change what I can and can't do?
So the type of business entity that you choose really doesn't really impact the type of expenses that you claim. Again, there's that rule for self-employed versus employee where employees can't take expenses. And there's certain, again, you have to work around that when you're talking about, let's say, an S Corp with a single person set, a small S Corp with, fewer one employee. The type of entity that really doesn't usually impact. Now, there's certain things like C Corps are only ones who can take, C corporations are, the ones who can take the dividends received deduction. But for the most part, there's no real impact there. Now, the type of business might, what type of, not the type of entity, but the type of business that you're in. Now that's where it kind of gets interesting. Trying to think of a good example, but,
the question,
a landscaping.
Yeah, go ahead. I was just going to confirm what you were saying is they clarified, I am an electrician versus I'm a landscaper, which I think is a pretty easy question for you to answer.
Yeah, I think the IRS isn't going to come out and say these are not allowed expenses, but let's say an electrician or a landscaper taking out clients for steak dinners, probably not going to be allowed unless he's trying to get a really big contract. But it really depends on the expense. The main rule is that the expense has to be essentially ordinary and necessary to your type of business. So if it's not ordinary and necessary, then it's going to get knocked out.
Landscaper cannot buy a yacht and then write that off. But
That's
a
a
boating
shame.
Yeah, it's an
company could
entertainment.
do that. Yeah, gotcha.
Yeah.
Okay.
Typically, actually, I don't think there's any business that could deduct a yacht anymore. I forgot what
Really?
the rules are on
What about a
the
plane?
rules for
But a plane, yeah.
recreation.
Yeah,
A yacht's a recreation facility. A plane's a mode of transportation. So it depends.
What
they're
the
both
hell?
transportation. It's just your style. It's style, man.
That's funny.
Yeah.
Yeah,
That's
I
a
guess you
shame.
don't hang out on trains, or I mean on planes though. But
But to be clear, you can deduct a plane.
Yeah. There's rules. There's certain rules regarding the amount of. I believe there are certain rules about to the extent, depending on, what the cost of a normal airfare is. I forget if those rules still apply, but I know they did at one point.
So-
You can only deduct to the extent a normal airfare would cost. So I believe. I forget off the top of my head though.
Like per trip, or
Yeah.
so I can't
That's per
deduct the
trip.
whole
And
plane.
then you got the plane itself, the travel itself would be subject to those rules, I believe. I'm sure I'm getting.
I'm
fact-checked
talking
on
if
the
I
rules
wanted
by.
to take my fat gains and go buy a private jet, can I deduct that?
If you will be using it for business purposes, it would be called a capital asset. So, as a capital asset, for a business capital asset, which is kind of similar to what a capital asset is for, investment purposes, you would essentially. I guess you could take a full deduction for it in the year you bought it if it is under certain limits. But for most planes that you buy, you're gonna claim what's called depreciation on it, essentially where you what's called capitalize the asset into your books, and essentially you take a pro rata share of it every year as a
I know
deduction.
what I'm doing this weekend. What about you, Jericho?
hey, listen, I live near the Santa Monica airport. I saw those G3s, G5s. I'm going over there shopping a little bit.
And my mom's not using it, man.
Yeah, she's not allowed to jump.
No.
In there.
No.
All right.
It's business.
You got a question from your chat. Why don't you go
All right.
for it?
Can I deduct NFTs that help me trade other NFTs? For example, an NFT that gives me market insight or tools of that nature of buying and selling, volume, that sort of thing. So like a subscription, but in an NFT package.
Oh.
So if it's subscription services, yes. If it helps you, that's interesting because it is a subscription essentially giving you investment advice, right?
Yeah.
Yeah. It would be a tool
There are
for sure.
certain there are rules about investment publications that kind of limit their deductibility. I recall if they completely eliminate their deductibility, but again, if it's a subscription that allows you to be able to, yeah, that would be deductible as an expense. Now, if it's a subscription that just gives you advice, that might be a different issue because essentially as a tool for learning. That gets a little different, and essentially education expenses related to investing are not deductible.
All right,
if
so
that answers. I don't know
Tools
if that answers your
deductible,
question, but
education, no.
Got
Okay.
it.
generally no.
Okay.
Okay,
Now,
cool.
here,
The traditional.
let me
Go ahead.
a little addition to that. After I use that tool and I don't need it anymore since it's an NFT, I can sell that NFT. If that NFT is now worth more or less than it was when I purchased it, am I allowed to harvest that loss or gain, or do I have to harvest that loss or gain?
Now, if you're actually acquiring it and it's like you're not paying a subscription for it, you're just acquiring it, that's going to fall into your capital asset rules. So
Got
in
it.
that case, if you're buying this NFT and you're holding on, and you essentially becomes as like the same as a business capital
key.
asset, not going to go to the plane. Yeah.
Yeah.
So then that's something you could claim depreciation against while you own it, and then if you sold it as a gain, you would offset it by your basis, and you would have taxable gain.
Okay.
Interesting. I didn't even
interesting.
think about like an NFT key that you use to get access to like stock trading tips or portfolios or something like that. So that was a good one. Good job, chat.
Very good.
Mine also very big brain. My chat wants to know: can I opt out of Social Security and medical?
Medicaid,
You just-
Medicare.
Yeah.
No. There are certain, generally no. If you're an employee, you generally cannot opt out of it. There are certain exceptions for certain religious beliefs that allows them to be exempt from Social Security and Medicare. Now, you do that, you have to also realize that, not being means you won't be eligible for benefits, Social Security benefits, when you do, like, later on when you're older in life. So, yes, there are certain religious groups. Yeah, certain religious groups. Oh, yeah, good point. Certain religious groups can claim exemption, but for the most part, no.
Got it. Okay. Yeah, no, my comment was just if it still exists as a functioning thing when I get to take advantage of it. But that is definitely a hot topic for a lot of people my age.
That's everybody's fear, I believe. Yeah.
What about for mark-to-market election? For do you have to pay Social Security on that if you have a mark-to-market election?
No, that's a question I haven't believe I've answered in a while. I don't believe that is subject to SC tax.
That's what I'm talking about, baby.
I like that.
Gotta make you a day trader there, Jericho.
I know. Hey, I've always thought it would be a really fun thing to do. I trade enough crypto to know that I'm probably not that great at it, but we can always learn. I think we have time for one final question before we wrap things up with Mike Stockjock. It's going to be your chat's question. Take it away.
Okay, here we go. If I'm an NFT creator, what, if any, business deductions can I use against revenue, i.e. cost for designing, creating, marketing, and the like?
So if you're creating NFTs, that's an interesting thing because it is an intangible asset. For the most part, all your expenses in creating that are directly attributable to creating that. So marketing, yes, software, whatever, has to be essentially capitalized into the basis of that NFT. So you would essentially get basis for your expenses. When you later go on and sell that NFT, then you can use that; those expenses would offset your gain. But yeah, it's essentially the same as deducting, but so long as it's ordinary and necessary to the creation, and you can attribute it to that, then yeah, that's going to be essentially capitalized, essentially added to the basis in an NFT, and then when you sell it later on, you would get to claim the deduction.
Gotcha. So when I sell that NFT, I'm paid in crypto more times than not. Do I have to pay taxes on that crypto immediately, or when I convert it to US dollar or whatever currency it is?
So you will have a taxable transaction when you exchange the NFT for the cryptocurrency. So essentially what your taxable gain essentially there would be considered a taxable event. Now later on down the road, when you sell exchange the cryptocurrency for US dollars, you're gonna have another taxable transaction since you're essentially converting it again.
Ow.
Yep.
And that's gonna be all based on the fair market value.
IRS gets to double dip.
At the time.
Yeah, that's tough. But I guess maybe it's up to us to say, hey, I don't want to do that, IRS, and they'll totally listen this time for sure.
Yeah, you try that out and let me know how it goes.
Luckily, it's not a full double dip situation because you're going to you'll pay taxes on whatever your gain was that first time when you sold the NFT.
You have two cost bases.
Yeah,
you're going to have, and then when you later on down the road, then it's the difference of the fair market values at the times. So,
gotcha. Well, this has been the longest I've sat and thought about taxes since I did them myself, and I'm never going to do them myself again. But thank you for joining us, Mike, and Andy as well, who's off screen somewhere. You guys were fantastic, and you answered not just my questions, but plenty of people in chat, my chat, stock jocks, very wide variety of complex and basic ones. This won't be the last time. I'm not sure, Mike, are you guys coming back to do the next one of these, or is it going to be a different group?
I believe it is Andy and I again. I'm not sure.
All right, well,
I believe it's so.
In 2 weeks or so, we're going to go back for a round 2, so make sure you guys stay tuned and pay attention for that. I had a lot of fun. I've learned a lot, and I will hopefully see you guys next time. Stockjock, any last words?
Yeah, absolutely. This was very enlightening, and I'm going to be taking my taxes to old H&R Block. When I walk in and I just give you guys the stuff, and you guys are going to be able to save me lots of money, hopefully, right? That's the deal. Or at least make it so I don't get in trouble.
Yeah.
Yeah, that's what our goal is help what do we say, maximum refund guarantee?
Yeah.
Yeah.
Always
Absolutely.
going for the biggest one. And not just that, chat, if you guys want to find out more information, HRBlock has a bunch of free tools for you to go and do some research. The IRS has some great tools for you as well. Don't bother with stressing yourself out. I promise it's infinitely easier to have other people do it. Taxes are hard. They don't have to be. Go ahead and work out with HRBlock, and hopefully you'll just get a refund sometime down the road. I don't even know if I've gotten one in my entire life.
Get
but
those fat
it would be
refunds,
cool.
Crude. Don't
Yeah.
let other people have your money. Get those fat refunds.
Yeah. All right, chat. Any last questions or anything? Please feel free to use the AMA extension next time to get your stuff going. And I think that's it. I think we're ready to wrap. So thank you, everyone, for joining us. Thank you again to Andy and Mike. Thank you to
guys.
Stock Jock.
Thank you.
Thank you, chat. We'll see you guys next time.